Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast. We're back once again to continue to help to educate you so that you feel comfortable as well as confident investing beyond your backyard. I'm your host, Billy Keels. And you know what? If you've ever wanted to know how combining experiences from different areas like the legal profession, private equity, as well as real estate can allow you to positively impact others and live the lifestyle that you really want to live, then you are absolutely going to want to listen to every single word of today's conversation. Because today's guest is not only a self-proclaimed recovering attorney who has his JD from Suffolk University. He also served as an assistant DA, and I really want him to talk to us about what that brought to his life and how that's helping him today. He's super passionate about helping other people. He has experience in working with family offices, and he is the principal of Excelsior Capital GP, and where they focus on assets in the area of $10 to $25 million. It's really gives me a lot of pleasure to welcome to today's show, Brian Adams. Brian, welcome to the show, man.
Hey, Billy. Thank you for having me.
Yeah, it's going to be a lot of fun. I'm really looking forward to today's conversation. And, you know, Brian, the thing is, we always love kind of asking the same 5 questions, or I love asking the same 5 questions, and we'll get into your backstory and stuff like that. But I always want to find out and help people understand, where exactly do you live in the United States?
Yeah, so I'm in Nashville, Tennessee, which is the capital of Tennessee. Tennessee is a state in the Mid-South. So if you were to draw a line kind of between Chicago and Florida, we're pretty much right in the middle. So the not the deep South, say like Mississippi or Alabama, but not the Midwest. So we're kind of right there in between, very much landlocked in the southeast of America.
All right. Sounds great. Someone say not too hot, not too cold, just right kind of thing.
Yeah.
I guess.
What they say is grits are optional. So we're in the South, but not the deep South.
There you go. Love it. All right. Perfect. And then help us understand, what is the most positive thing that's happened to you in the last 24 hours, Brian?
Yeah. So the most positive thing that happened to me in the last 24 hours would be that in Nashville, we have a large medical center, one of the largest in the country, Vanderbilt University, where my family works, and they have started to get their vaccines slowly. But my father-in-law is getting his today, I believe. And so news of that happening has been met with rejoice from our family.
Wow. Fantastic. And thank you for sharing that. And it's just another testament, right? As we focus on the things that are important, family, you're talking about the vaccine, because what moment in time we're living right now, it's something that's really important and just getting started. And it's those little moments in life that really can help us to focus. It's definitely not all about money at all. So thanks for sharing that. And listen, Brian, I talked about a couple of things, a couple of highlights, but these are kind of my words. The thing that really makes this whole conversation interesting is your words. So could you help us understand, myself and the entire Going Long family? Give us a little bit more about your backstory so we can get to know you a little bit better.
Sure. I appreciate that. So I'm from New York originally, which, not New York City per se, but a few hours north of there. So I grew up in the Northeast, went to college in Connecticut, where I met my wife, who is from Nashville. So moved here about 15 years ago. I did, to our pre-call conversation, I did practice law for a number of years here in Nashville, Davidson County as a district attorney, which we can talk about if you want to. And then was very fortunate to have married into a family which has a single family office, which is essentially an investment partnership for the benefit of the descendants of a certain person. So kind of like a mini wealth management firm, but just for the family itself. And that family office, my father-in-law and our CIO had invested in commercial real estate fairly extensively over the last 25, 35 years. So when I joined the family, I got exposure to some of the investments we were making, got to meet some of the sponsors and GPs that we had worked with, and connected with my business partner, who's also a New Yorker who had married a Nashville girl. And we started our company 10 years ago.
Wow. So that's very cool to take a look back and all the things that have happened in 10 years, right? Just absolutely amazing. So many things can happen. It's interesting because although it's not Tennessee, like my wife is from Barcelona and I've been living in Barcelona now for 15 years or so. So it's strange how those things happen, right? So you talked about just a little bit of the experience, and I would like you to just quickly talk to us about the experience that you had with law early on, and kind of your first roles in the DA role, because I want to tie that in later on, if you wouldn't mind.
Yeah, sure. So for people unfamiliar, being a district attorney is you're representing your city or your state, and you are prosecuting people who commit crime on behalf of the citizens of that city or state. And so I did that for about 4 years. In Nashville, Davidson County, it's a consolidated metro government. So we represent a fairly large geographic region. And I was on the vehicular trial team, which means that all of the prosecuting I was doing was related to cars. So I was trying everything from an open container, which is a very, low C misdemeanor type of thing, and then also all the way to vehicular manslaughter, where somebody is killed due to reckless behavior. And it was a great job in terms of cutting my teeth as a young attorney. The best part about it by far was trying cases where you're essentially going up in front of 12 people and pitching your version of events versus the defense side version of events. But it is a job where it's typically something you do for 5 or 50 years. I knew I was not a lifer. I had this entrepreneurial spirit that I knew at some point I wanted to let out of the cage. But it's a great way to start early on in my career, and I got to meet some incredible people.
Oh, fantastic. And so, as you said, being able to pitch your version of a situation versus someone else's version, right? Because being able to seeing the same situation from different sides of the coin per se. And then I guess ultimately the jury is kind of making the decision on how things go. So that's really important. You've talked to us. We're going to end up where you are today and how you're impacting lives. There's also one other just really quick stop I'd like for you to help us understand maybe what you were doing and why you did it. You also made a stop in a place called the Phoenix Club. And I know that is a non-for-profit, and maybe just help us understand kind of why did you make that choice and what did you learn from that?
Yeah. So it was important for me, and still is. I've aged out of the Phoenix Club, but the club is an organization based here in Nashville for young professional men, 25 to 40 years old. And we do two things. We do well and we do good. And so on the doing well side, we do a lot of leadership development, intensive networking, professional development, help people get to that next step in whatever industry or career they're pursuing. And then the doing good side is we've have a venture philanthropy model where we help direct funds to certain organizations that are 501c3 youth oriented within Middle Tennessee. And it could be anything from the Boys and Girls Club, YMCA, to a host of very smaller niche boutique 501c3 nonprofits in town. And we essentially aggregate capital and put it to work along with our various skill sets. So we have people who are in investment banking, financial services, professional services, healthcare, et cetera. So in addition to the dollars that we put to work, we also put our human capital to work to try to have a multiple effect on the money that we're putting with that organization. And it was a great way to be part of the community in a time where early in your career, you may not be able to write big checks, but you can still have an outsized impact within your community itself. And that was really important to me.
That's fantastic. And having that important role of, once again, being able to do well and do good and being able to help and impact other people's lives. I think this is a theme that we see in you, no matter what it is that you're doing. And I know we're just building up, but we're going to keep going along the same line because from there, maybe we can skip, or you can talk to us a little bit about how you then moved from that to start to understand more about the real asset world, or maybe particularly real estate.
Yeah. And they do dovetail. So the Phoenix Club is full of entrepreneurs. And so when I got involved with the club, I started hanging out with a lot of people that had started companies. Maybe they had blown up companies, but they were, serial entrepreneurs out there trying to conquer the world. And it really lit a fire under myself to get out of my comfort zone, being in the district attorney's office and being an attorney, and go out and try to apply those skills and my knowledge and my work ethic towards creating a company. And so that's really the genesis, was through connections I'd made at the club and through the family's experience and the investments that we've been making. I decided, at some point I wanted to take real estate, which had been more of a side hustle kind of part-time gig that I did, into being a legitimate full-time job. And that occurred just about 10 years ago.
Fantastic. So, and that started once again and I'm going to maybe simplify it a little bit, but in social circles, you started seeing and coming into contact while you were doing your day job. You started listening, learning, probably wanting to do some application of what you were learning. And then that took you along another path, right? And so then you started to gain the experience. What did that just kind of listening every day, all day, kind of what made you have that, wow, you know what? I want to just not just listen to this. I need to get involved in this. Kind of talk to us about how that happened.
Yeah. And it is interesting, given everything happening today, there's so many more resources available to people. I remark on this a lot in terms of, you can essentially get an MBA or a master's in real estate if you just put aside enough time, because shows like yourself, content creation resources are so abundant now, much more so than 10 years ago. So kudos to you and your team for putting this on, because I think it's a huge benefit. But the tipping point for me was I did a lot of informational interviews. And so I would go and meet with older attorneys when I was still contemplating potentially staying in the legal career. And the recurring theme amongst most of them, be it in the district attorney's office or be it in a large firm, et cetera, was, I wish I could go back and try my hand at being an entrepreneur. And that was across the board: venture capital, real estate, whatever the asset class or the product type was. But that really made me realize that I have the opportunity here in the window where I can go out and take a risk. I'm young. I was married at the time, but I didn't have children. And it just really came to fruition because our family's legacy and the culture of our family is that the family office, the partnership, is there to allow us to be of service to the community or to be an entrepreneur. And oftentimes family members dip out of both identities. And so I certainly was of service for a number of years, but I also had this great infrastructure and ecosystem around me within the family to allow me to go out and take risk. My father-in-law encouraged me, I think in a modest fashion, to go ahead and dip my toe in the water and see what would happen.
So it's great to have that influence, right? That really challenges you. And I mean that in the positive way, to go out and take some risks, right? Depending on where you are in your life, you may take more, you may take less. And depending on what you consider to be risk, it sounds like you had the right opportunity, but at the end of the day, Brian, you had to take the action to make that happen. So I think that is fantastic. And so what I'd like to now bring us to is where you are today, right? We talked about Excelsior Capital, and I know that you have a particular passion and a focus. And if you can tell us more about what it is that you're doing today and kind of why have you decided to carve out this particular space, and I'll let you tell us exactly what that space is.
Yeah, I appreciate that. So For perspective, I have 15 employees now in the company. We manage around 2.5 million square feet of commercial real estate across 12 markets in the Midwest and the Southeast. And it's roughly a $450 million portfolio, kind of gross asset size. Mm-hmm. So we've grown quite dramatically over the last 10 years from where we started. But the genesis of the company and what I'm trying to do are solve pain points or problems that I saw in the marketplace. And my marketplace are my investors. So high net worth individuals, families, independent private wealth management firms, they really needed three things. They needed a place where they could put capital to work that was uncorrelated to the market. They needed a place where they could derive good quality yield and passive income. And they needed a place where they could still have full advantage of the benefits that come from direct real estate ownership. And so I started the company to serve that marketplace because I thought it was underserved by the overall financial services economy. And so the product that we offer and the investor experience that we offer really focus on those three pillars.
And so that's fantastic. So that's being able to put your capital to work. That's also high quality yields and passive income, and then the benefits of direct real estate ownership. And if you'll allow me to maybe just to have you confirm, but when you talk about the direct ownership benefits, you're talking about tax optimization as well as some of the other things that you talked about before?
Yeah, so we only raise capital on a deal by deal basis. So we're syndicators. Instead of committing to a blind pool commingled fund or some kind of pool of capital, my investors are only participating in this specific offering that is in front of them today. That's that specific building that we're raising around. And so from the tax benefits side, I realized early on that was a huge component of being in real estate. And people say, don't fight the Fed. I say, don't fight the tax code. And the tax code is a series of incentives and disincentives that is really, fashioned to incentivize you dramatically to invest in real estate, be it residential or commercial. But the benefits that we focus on are accelerated depreciation, cost segregation analysis, and then I have a controller in-house who's a CPA with a public accounting tax background. We can't give tax advice to our investors, but we certainly work very hard and very closely with our third-party professional liaisons to make sure that we're leveraging every benefit that we can out of that.
Well, and I think this is something that's fantastic. And as we continue to educate our going long family, this is one of the areas, right? You can look for yield, you can look for, the passive income. At the same time, it's not about how much money you make, it's about how much of that you actually keep, right? And so being able to leverage some of those strategies are absolutely critical. And one of the things that I've also found that we don't tend to pay enough attention to. And so I'm glad that you also mentioned that. Did you want to say something else? You want to build on that?
No, I would just completely agree with you. I think one of the big mistakes that people make, or it gets underappreciated, is if you're a taxable investor. So in the States, if you're an individual or a family, not an endowment, not a pension plan, which are non-taxable entities, you really should be focusing on your net of fees after tax returns. Yep. Gross numbers are meaningless to you because a big gross IRR at the end of the day, if 60% gets wiped out by taxes, who cares? And so you're exactly right. And that I don't think enough sponsors talk about that. I don't think enough sponsors lead with that. And I don't think enough sponsors have the internal infrastructure to make sure that they're keeping their eye on the ball there.
Yeah. And I love that you said that. And I'm just going to give one example, right? Because this is a lot of times what happens with high wage earners is many times people are listening and worried about when's the next promotion, how much more am I going to make on my promotion? And they don't typically take into consideration the fact that you're going to move into the next higher tax bracket. So you're going to work more hours, you're going to make more on the gross side, but then at the end of the day, once whoever your tax country is, they're typically going to take more out of your pocket. So you're making more money on the top line, but at the end of the day, you're bringing home less and working more hours. So
yeah, I mean, I can't promise that this will be the case for everybody, but for us, for the most part, we're able to show a loss on your K-1 tax return for years 1, 2, maybe 3, while still achieving, 8 to 10% cash out cash yield. So you can offset those gains elsewhere in your portfolio with those losses. An extremely powerful tool for high income earners, like you said.
Yeah, and this is great. And as Brian said, right, we're just talking about different ideas and things that we've seen. All of these different types of philosophies that we're talking about, or applications that we've seen or are talking about, you're going to want to talk to your tax professionals, and they can tell you exactly how it will apply to your specific situation. We're just here sharing ideas with you. So Brian, let's dive into, so you've kind of talked to us about where you are right now with Excelsior Capital. But as you're geographically dispersed, right, this is something that we love here, right? Because one of the reasons that, I wanted to get this podcast started, because there's so many people that we heard in the beginning, like, you have to invest in your backyard. Like, I live in Barcelona, Spain, and as of today, I invest exclusively in US-based real assets. You talked about being in 12 different markets. I know that you're in a number of different states, like Kansas and Virginia, Ohio, my home state, and Tennessee, right? So help us understand, like, this is, some people would say, completely goes against what you're told, is to invest beyond your backyard. You've done it for a specific reason. Help us understand why you've made that choice.
Yeah, for me, it's all about the risk-adjusted return. And we're trying to solve for a stable passive income yield, some kind of distribution stream. And that means that we're buying at a cap rate basis. We're not doing a huge amount of value add. We're not doing development. We're buying in-place cash flow. And unless you take on a ton of leverage or a ton of risk in a market like Nashville, it's a great place to live, but is very expensive. Solving for something close to an 8% cash on cash yield, which we think is just about where the Mendoza line should be for taxable investors, given the risk profile and the illiquidity premium, to go out and find that quality yield in Nashville, it's impossible. So you've got to always be, in my opinion, looking at 3 to 5 different markets, because you're going to be cycling out of places, right? I mean, we invested in Nashville, we cycled out of it. We invested in Raleigh, Durham, cycled out of it. Tampa Bay, cycled out of it. And so we're constantly evaluating new markets where we can go and find, that good cash on cash yield. And does it mean that I travel a lot? Yes. Does it mean I'm on the phone with brokers a ton? Absolutely. But I don't think it makes a ton of sense for me to offer up, lower return profiles just because they're in my backyard. America's a great place, and there's a lot of really exciting things happening across the country, and we're constantly evaluating new markets.
Always evaluating new markets, I think, is a great thing. You just mentioned a couple different states. You also said, does it mean that you have to do certain things, right? I think there's sometimes it can also be this misperception of everything is super simple. It can be, some parts of the business can be simple, but it doesn't mean that it's easy. So help us understand, right? Because you've got to cast a net that's pretty wide. You talked about being on the phone with brokers. In a non-COVID world, you're probably on planes pretty frequently. How do you make it a process that you can actually get out and scan the markets for the types of assets that where you're looking to deploy capital?
Yeah, so I'll answer in 2 parts. The first part is, and you're exactly right. Pre-COVID, I was taking between 100 and 150 flights a year. Yep. So a large part of my job was traveling and being boots on the ground. And, I always tell people when they join the firm, if you think you're going to be a principal on the buy side, you need to go somewhere else, because the way that we win deals, the way that we find off-market opportunities is because we're on the sell side. We're selling our company to these landlords, owners, brokers, that we are a liquidity opportunity for them. We are a way to unlock value. And so we are constantly pitching brokers to bring us deal flow. And that's how our acquisition folks think about the world. The second part is we have a matrix that we put together with year-over-year population, wage, and job growth, where we can buy things on a per square foot and a cap rate basis, and what the underlying economic industries are that are pushing within that certain metro area. So we like to see healthcare, education, government, and some kind of STEM knowledge-based economy. We think it's countercyclical. We think they're resilient. Once we have those kind of boxes checked that makes sense for us, that's on a metro level. Then we go into the submarket level. So these are pocket neighborhoods. Typically, we can go to 2 submarkets in one metro, and we look for how resilient that submarket was during the downturn, which is in a few years, COVID will probably be a better stress test. But for now, the Great Recession is the stress test that we look at. We look for mature submarkets that have been around for 25 plus years, very difficult to do new construction. So you'll feel very protected as a landlord. And we look at 15-minute communities. So communities where a decision maker or an executive can get to his country club, can get to his child's school, can get to home, all within that kind of 15-minute radius. They're like many little suburban areas. And so that's how we break down where we should be looking. And sometimes a market will screen for us based on that matrix, and other times it won't, but we're constantly revisiting it, inputting new data points, and seeing where we should be spending our time.
And as I'm listening to you and understanding where you should spend your time, where you're focusing, making sure that it aligns with what your focus is at Excelsior, I think that's fantastic. And also for a number of our going long family, you'll start to realize, or they will listen to you and say that the process that you're explaining is very similar to others that are experts like yourself and are having success, but they're doing it maybe in a different niche. So help us understand, you've talked about the high level process, but when you start thinking about high quality multifamily tenants, some people may not even know what that means. So can you break that down? Help us understand what that is, and also why you've decided that is the niche for your company and your investors.
Yeah. So we focus on commercial, and commercial could be anything from a suburban office building to an industrial building to a flex building, which is that kind of one-story product you see outside of airports where it's an office in the front and industrial in the back. We're big fans of that product type. And we've also started getting into some triple net, single tenant type of products, which we can get into if you want. But for us, it goes back to that risk adjusted return. We could certainly go out and find some great new construction Class A apartment building in Austin, Texas. And I'm sure it would do really well. Same for self-storage, same for data center, et cetera. But if your real yields after leverage are going to be 2 or 3%, I just don't think it justifies it for a taxable investor that eventually is going to need some kind of liquidity. And so for us, trying to achieve that 8 to 10% cash on cash yield, commercial is where we can find that in a quality sense. And so that's what we're solving for. In terms of the tenant profiles that we look at, it's a mixed bag. It's going to be some publicly traded credit tenants. It's going to be some local or regional tenants that you may or may not have ever heard of. But that's why looking back at the historical data and seeing what that submarket performance has been over the last 10 or 20 years and seeing what that asset performance has been from a historical occupancy standpoint, that's where, again, going back to crunching the numbers and seeing that, okay, well, this is the Class A building for this submarket, and it's going to get $25 a square foot. That's best in the market. To justify new speculative construction for somebody to steal my tenants in that submarket, rents need to be $35 or $40 a square foot. That's a huge delta point, right? So going from $25 to $40 in a market will take 10 or 20 years sometimes. So we look at things on a cost, on how much we're buying versus replacement cost, but we also like to look at how much we're buying versus replacement rents. And that's where we like to see a big delta. And that's the dynamic that we like to see when we look at markets.
Okay, perfect. So once again, and I'm going to paraphrase this, but you're looking for the inefficiencies in this particular market where you can then solve that problem, not only for for yourselves, for whoever's in that building, and also for your investors. Once again, it comes back to problem solving. Would that be accurate?
That would be accurate. And I would also add that one of the things that you often see is style drift for managers, right? Once they get to a certain size of assets under management, they try to go after bigger deals because they can. What we found is that 10 to 15 million, maybe 20 million, depending on the market, is our sweet spot. It's below where the private equity groups are willing to go because it's just too small. And it's above what the weekend warrior broker syndications can do. And that pricing and efficiency usually means that we can get, outsized returns, just because that $5 million capital raise is a very difficult thing for many people to do, but that's what we specialize in.
Yeah, and I think that's brilliant. And Brian, so thanks for sharing that. And if you all did not hear that or catch it, go back and listen to what Brian just said, because that's really platinum advice right there. So know where you are, be able to niche down and, make sure that you are optimizing whatever the opportunity that you see in front of you. So you don't necessarily need to go to the next shiny object just because it's bigger, because you're getting bigger. If you want to, you can, but not necessary. Brian, you talked something, mentioned something earlier too, when you talked about the single tenant versus multi-tenant. And so for some people, as we look into office space, this may be something new. And you also talked about the different profiles. So could you give us kind of a mini masterclass on the differences between single tenant versus multi-tenant, and then some of the different profiles and maybe types of companies? I think that would help people a lot.
In terms of the tenant representation?
Type. Yes, exactly.
Yeah. So what you're going to find is that these tenants reflect the underlying industries within this marketplace, right? So oftentimes it's going to be financial services or professional services. And when I say that, what you should think of is a regional law firm, CPA firm, wealth management firm. Those are often kind of that 2,000 to 5,000 square foot tenant. And then oftentimes in these buildings or these markets, you'll have a corporate anchor tenant within that building. So a publicly traded company that's, healthcare related or tech related, that'll be oftentimes 50% plus of the rent roll. And then the rest will be kind of smaller tenants that, are local or regional operators. The single tenant side of the business, the space that we've got into recently is actually early childhood centers. So these are, not daycares, but educational areas. And they are obviously specific use just for that one user. And it's actually a franchise model called Primrose, which is really interesting. And we could get into the investment thesis there, but that's what we do from the single tenant side. Otherwise, we're looking at multi-tenant. And the dynamic that you really want to think about single versus multi, oftentimes single tenant deals, it's kind of a fire and forget mentality where, oh, this is great. It's triple net, which means the tenant's responsible for everything. It's very, very, very passive cash flow, but you've got to be very careful there because it's very much a binary outcome, right? So if that tenant goes dark, if there's an issue with the operator, finding another user for that space can be difficult. Sure. And there's not a lot of downside protection. Whereas a multi-tenant building, if 25% of your rent roll goes away, you're still able to have decent cash flow. And that's the dynamic that you've just got to see where you are from a risk allocation perspective, because multi-tenant takes a lot more work. You're probably going to get bigger returns, but it's going to be lumpier. It's not going to be a bond, right? Quarter to quarter, there's going to be huge differential. Well, maybe not huge, but there will be differential between your NOI. And so that's just something that you just need to appreciate and learn more about as you look to allocate capital.
And so looking to allocate capital and understanding the different opportunities, I just want to highlight once again for our going long family that what you're talking about is, once again, you're making decisions. You're deciding not to go for I'm going to simplify it again, a single family house. It could be a single tenant for a net lease, or you can go to the multi, as you talked about from the office space perspective, where you may have one very large publicly traded company, and then you have smaller satellite or smaller local companies, which I love that you tied that in, because once again, you're talking about education, you're talking about healthcare, and you're talking about government, which goes back into your overall Excelsior thesis. And so you're focused on these particular types of organizations, companies, entities, no matter where you are. So I think that is, once again, just reinforces having this focus on your niche can allow you to derive value in multiple markets. So do you want to build on that or mention something else?
No, I think that's right.
No? Okay, perfect. What is the, when we talk about, you kind of mentioned it, but once again, because this is a new space for some of our going long family, you talked about the credit worthiness there. So talk to us when you talk about that. What do you mean by that as it relates to company wise?
Yeah. So the credit worthiness of the tenant is going to be a function of, how likely they are to pay their rent, right? So it's essentially like underwriting the bond issuance of a company. And when you talk about credit tenants, that typically means that they are a publicly traded or largely held private company that has issued debt in some form or fashion, and a third party evaluator comes in, and for that debt issuance, they assign some kind of credit rating to that tenant. And it's going to depend on a whole host of factors that I'm not smart enough to understand how this all works, but it's going to be how much debt they have on the balance sheet, how their company is performing, what revenue is like, what the go forward forecasts are for that industry and business. And so I think having a credit tenant is a great thing, but I also don't think that investors really appreciate exactly what it means necessarily. So I personally think that oftentimes that credit is way overvalued in the marketplace. And we've seen with COVID that just because you've got a great credit rating doesn't necessarily mean that you're immune to having issues in your business, right? I mean, in Q1, if you were to buy an office building where Delta Corporate was the user, their debt was trading at par in January and February, whereas now, obviously, they just got bailed out for the second time by Congress. So it is something worth noting, but I honestly wouldn't put too much stock in it. I would look at it as, in your own community and your own world, what are businesses or practices that did really well through 2008? And where do you think that you would continue to, spend time or put money to work, in terms of, your local CPA, your wealth manager, your attorney, your medical arts usages. These are all things that, you can bring to the table and you not analyze a deal, because you can see, okay, well, even if things are bad like they are now, I'm still paying for my dog to go to the vet. I'm still paying to have my estate planning done. And so I think you need to kind of balance both those things, but that's conceptually what credit rating is.
Okay, perfect. And that is once again very helpful. So that once again, we can understand more about this space. You're helping us to understand. And, it's not really a million miles away from an individual that is really kind of looking to understand kind of where are they at a particular point in time. People look at least stateside, you look at your FICO score, and that kind of helps you understand, simplifying it a lot, right? Kind of where you stand at an individual level. And it's very similar to, you talked about larger companies, and depending on what they're doing, it's kind of their way of understanding at a particular point in time. Are they someone, or is it a type of entity that you feel comfortable and confident in terms of a renter? A couple things, and before we kind of get to our going long final three, because I want to keep talking to you forever, but as you're continuing to help us understand more about this space in terms of high quality tenants and office space and things like that. Help us understand, when the typical person that is reaching out to you, that you're helping them solve that problem, Brian, that high net worth individual, that person who is an accredited investor. What's the process like in terms of connecting with you or learning and working with your company?
Yeah, so we obviously have a legacy network of investors. We have 550 investors, I think, today. Mm-hmm. But in a post-COVID world, it's a good question. Pre-COVID, I would, get connected with somebody to make an email introduction or a referral, and then we would go have lunch with them and talk, give them the pitch, and then stay in touch, et cetera. What we've really transitioned to is being more of a content creation type platform, where we're a resource for people to learn about not just commercial real estate and not specifically what we do, but more about the marketplace in general. And so we create a lot of content in terms of blogs, webinars, podcasts, et cetera, where hopefully we can build up some of that goodwill and be thought of as a thought leader in the space. And then people gravitate towards the way that we think about investing in commercial real estate. And so oftentimes people now will reach out over LinkedIn or by a webinar they've attended, and then we'll do a follow-up call, or they read a blog piece and they go to the website and they sign up for our newsletter, et cetera. That's typically how the funnel works, although we still get plenty of just warm introductions and referrals from our current investor base.
All right, perfect. And this, once again, you're out in the marketplace. You're working to help people solve their problems. And as this new kind of day and age that we're living in, you've been able to pivot. And one of the things I would recommend to everybody is go check out what Brian and his team have done. I mean, their website is full of information. I mean, from blogs to videos. And it is, I've personally gone there. And so I would say to everybody, if you're part of my family, then you should definitely go and check out what Brian and his team have done. And you're going to give us a chance to talk about that in a little bit, but very, very well done. And I love the way that you all are sharing the information, and you are, I would say, not trying, but you are definitely in the thought leadership space there. So based on what I've seen. So I just thought that would be interesting to find out. But you know what, Brian, it's time to get to our going long final three. And the thing is, I never ask anyone the going long final three unless you tell me that you're ready for me to ask you the going long final three. So are you ready?
I'm ready.
All right, here we go. I kind of knew you were going to say that. I think you were born ready, Brian.
Do it.
So here we go. So the very first question is, we started kind of where you are in the United States, and I like to bring it back this side, being over here in Europe. And so I would love to know, what is your favorite European city that you have either visited or is still on your bucket list to visit?
Yeah. So I actually lived in Germany for about a year while I was an undergrad in school. And I studied at the University of Regensburg, which is about 45 minutes southeast of Munich in Bavaria, near the Czech border. And just have a huge affinity for that part of the world. Had a great experience being a student there. And it's one of the largest cities in Germany that was, for the most part, untouched during World War II. So it has just incredible archaeology and anthropological status within the community there. So I would say that's probably my favorite. It also claims to be the place where they invented bratwurst. It's very contentious, but that's on this map. So.
And very well pronounced. And also, I that was one of the things we didn't talk about, your German studies degree. So that ties in very, very, very well. So thank you for that.
Yeah.
Next thing, Brian, one of the things that I've seen as a trait in successful people is that typically have only made one mistake in their entire, well, okay, maybe not, maybe one or two or a bunch, right? But more importantly than the mistake or the learning opportunity, what is the one lesson that you would pay forward to someone else so that they may not make exactly the same mistake?
Yeah. So it's a great question. And far and away, the biggest mistake that I made in the company creation and that I see other entrepreneurs in the space potentially making is you cannot underestimate the fact that not only do you have to know what you're doing on the real estate side in terms of the investments, but if you want to be in this business, you have to also appreciate that you are starting a small business that has to support those real estate investments, but really has nothing to do with the real estate itself, right? So you're talking about reporting, marketing, investor relations, tax, audit, HR, and all the overhead and all these things that, have to do with running a small business that I think are even more important, frankly, than the real estate deals themselves. Yeah. And there's a dual risk there, right? And so entrepreneurs oftentimes will put that on the back burner because they want to be deal guys. Yep. And that is a long-term problem. And then I think investors don't do enough diligence on what that actual business infrastructure looks like because they don't realize they're taking a risk with you at being an entrepreneur in a small business and also taking a real estate risk. And so those are the biggest mistakes that I see that I certainly have lived through myself as well.
Wow, that is, once again, this is like one of these moments where I say that was platinum advice, right? Because I think a lot of times people do just think syndication or aggregating capital is something that's, you can become a deal junkie really quickly. And as you do that over and over and over, you start to realize, okay, well, hang on a second. We have this particular opportunity. And at the same time, we have a lot of investors that are expecting us to provide input, give response to questions. They need their K1s. They need this, they need that. And then as you start to build your team, well, all of a sudden, wow, you're actually building this business. So I love that you shared that with us because that is something that is amazing and something that we don't hear enough. So thank you for that. And then lastly, Brian, we're always wanting to feed the brain here. So I would love for you to share with us, what is a book that you would recommend to the Going Long family?
Yeah, it's a great question. And one of the books that I've been really passionate about lately has been Reed Hastings' book, The No Rules Rules. Mm-hmm. And he was the founder of Netflix. And just a really interesting way to think about managing a company in today's environment. And he has some pretty wild ideas. I'm not sure I would describe to all of them, but it definitely will make you rethink about how you can manage your own professional career and manage a company in very much a different light. So I highly recommend it. And if you can do the audio version, it's really well done. And it's in conjunction with some business school professionals. So it's not exactly what you think. It's worth checking out.
Okay, the No Rules, and appreciate that. And that will also be included in the show notes. So, wow, Brian, this has been awesome, man. I'm just thinking from, and like I said, we didn't even talk about your German studies. We should have talked about that because that would have been awesome. Maybe on the next time that we have you back. But being able to focus on what you were good at from a legal perspective, you had that opportunity. You were then surrounded by other people. You kept your options open, you kept your mind curious, and you were also challenging yourself based on things that you heard other people saying. So you didn't just say, this is what I'm going to do my entire life. You just mentioned you could have done it 5 years, or you could have done it the whole rest of your life, 50 years. And as you started listening to people that told you, wow, they wish they would have done something earlier, or they would have had this particular opportunity, you not only thought about it, you actually did it. You've continued to focus on being able to be someone who is now leading a company that is focused on solving other people's problems. You are focused on, and whether that be the asset owner or your investors. And also, I'm sure that also trickles down into your own organization. And the fact that you've carved out a niche, that you're very focused on that and you want to continue to add value. I mean, these are things that are phenomenal and are one of the reasons that you are also in such a successful position that you are today. And so, I know that I'm thinking about these things. I know that people that are listening to us, that are watching us, because they definitely need to be watching us, are thinking to themselves, well, how in the world can I find out more about Brian, what they're doing over at Excelsior Capital? How can I enter into your world? So I would love for you to share, not just with me, but the entire Going Long family. What is the best way to learn more about you, what you're doing in Excelsior Capital, as well as with your team?
Yeah, I appreciate that question.
Yeah.
I'm very active on LinkedIn. That's how we connected. I post often. I reshare all the content that we create. So if you send me a message, I will respond to you. Brian C. Adams, Excelsior Capital, happy to connect and give whatever advice I might be able to. And then we do send out a monthly newsletter, which has the content we've created, as well as some of the thought pieces or news items that we think are worth your time and effort. You can go to the website, excelsiorgp.com, and you can subscribe to the newsletter. That's also probably the best way to get started if you're interested in learning about investment opportunities with us. There's a process that you can run through the website as well.
All right, fantastic. ExcelsiorGP.com, or you can also connect with Brian. As he mentioned, we connected over on LinkedIn at Brian C. Adams. And yeah, man, phenomenal. So Brian, I want to thank you from the bottom of my heart for you taking the time to invest with me and invest with the entire Going Long family. And I wish you continued success, man.
Awesome. Billy, thank you so much for having me.
All right. Awesome. And listen to the entire Going Long family. Once again, thank you for investing the time with Brian and I today. It's been phenomenal. I mean, Brian has really shared so much information with you. He's given you some actionable steps that you can take. He's even giving you the path to connect with him and his team to learn more about what it is that they're doing, their process. And you know what? One of the things we always talk about is you can be that person that makes a positive impact on someone else. So why don't you take the opportunity very quickly, share today's episode with 2 or 3 other people, right? You can be that person that makes the positive impact on others. And you know, at the same time, Brian and I would love to know, what did you like about the conversation today? What did you find actionable for your specific situation? You know, what would you have liked to hear more about with Brian? And maybe we can get him back and have another conversation. And as you're writing those reviews for us, you know, if you want to make it a 5-star rating, we'll also accept those, right? We're definitely open to those things. And, you know, until we get to the very next conversation, I'm really looking forward to welcoming you back. And until then, go out and make it a great day. Thank you very much. Wow, don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.